Hi guys, this is the 13th of December 2023 and my name is Gashar Gashehe and welcome to another beginner series. This is episode 2 of the beginner series 2023. So for today, for the last episode, I had an introduction of Forex and what Forex actually means according to the general terminology of Forex. I couldn't say everything in one video, neither do I know everything, but that's the basics that you need so that you can start your Forex journey. So for this episode, I'll be talking about premium stroke discount arrays. So what's a premium, what's a discount, and what arrays are to look for in a premium or a discounted area. So the blue box around here, these are the things that we're going to tackle in this video. So there are old highs or old lows. There is the rejection block, there's the fair value gap, there's a bearish bullish order block, there's a liquidity void or gap, there's a breaker block, and there's a mitigation block. These are the arrays. These are the arrays that we look out for in a premium or in a discounted area. So what I'm using today and what I'll be using from today will be trading view. The last one I used Forex Tester 5, so that had some limitations, but there was that specific chart that I did want to teach you guys with. So from today you guys can see tradingview.com. I'm using the free version, so you don't have to pay it. Just click on your tradingview.com, you sign up with them using your Google account or your email account, and then they give you the free version where you can just do all your analysis, guys. So let's jump into the meat. So this is the direction of the market. This is how the market does on a daily basis. Yep. Let me first do this. Yep, I missed on this right here. So this is what the market does on a daily basis. Yep. So I won't be tackling a consolidation or a sideways trend. I'll be tackling a downtrend and an uptrend. But on the real charts, I'll be just doing a downtrend where I have everything in place. So if this is the direction of price of maybe what's happening to a certain share, let's say it's an Apple share in a certain day, in a certain week, in a certain month, in a certain year. So, or you can say that maybe the price of gold, or now in this instance, this is the Great Britain pound paired by the US dollar. So I want to use something easy for beginners to understand. So let me use an example of a car. So if this is a car, and for this car the price was let me say something like let me put it at $9,000. $9,000. That was the price, the starting price, maybe this year. Let's talk about an year. So this was the price of I don't know what model of a car it is, but it was at $9,000, and then it shot up again to, let's say, somewhere close to around $12,000, like that. And during the entire year, the market price of this car has been dropping to the downside. Now in Forex, it's really important to know the premium and discounted areas so that you can know what to do. Now this will be the price of now land. So this is a car, let me even write it up here, bold, big letters. That's a car. Yep, we are talking about having a car. Let me use a purple tint. So that's a car. And what we have here next will be land. So it was at $9,000 and let's say pesos, $12,000, and yes, like that. So what we're having here is this car was at $9,000 and then it pushed up into $12,000 and then it dropped. Whatever figures you want to place on these high and low, but you get the movement. This is the movement from 9,000, it goes up to 12,000, it goes down to whatever figure is below 9,000, and then it goes back up somewhere just slightly above $9,000, and then it shoots down below these areas, and then it shoots up again somewhere close above it, and then that's the type of movement we have. So what's a premium, what's a discount? Be anything from these $12,000 to these. Let me put this at let me put it, let me give it a figure so that you guys can maybe understand better. Let me give it a figure of how many dollars. Let's say $7,000. So it means that the market price at the beginning of the year of this car was at $9,000. It shot up to $12,000 and then dropped to a $7,000. Yep. And then it pushed back up somewhere close, just slightly above $9,000 before it went below $7,000. So anything between $12,000 to $7,000, anything equilibrium, I'm talking about a 50%. So what I'm going to do, I'm going to take my ruler here, I'm going to measure from these $12,000 down to $7,000. This is my midpoint. You can see the red arrow right here. So this is just but a demo, but I really want you guys to understand this. For any beginner, it's really critical for you to understand this. So from $12,000, if the market is on a downtrend, I measure from up going down. So from $12,000 to $7,000, and then I get my 50%. So at my 50%, anything above going back to $12,000, my first half, that will be my premium. My lower half will be my discounted areas. So if I'm looking to sell the market, what am I looking for? I'm looking to sell at a premium area. Let's go to the land. In land business, the beginning of the year, these were the prices that we experienced for land, and then it shot up to $12,000 and then came back down. Let's say something close to $9,800. Yep. So these momentum down here. So I'm going to measure from down here to up here. I'm going to take my ruler from 9,000 to 12,000. And then I'm going to get my 50%. It means my lower half will be my discounted areas, my upper half will be my premium areas. So then the market pushes down and then boom, we go above $12,000. Yeah, $12,000 in price of land. And then the same thing, and I already told you guys, in an uptrend I do my measurements from down here going up. I'm following how the market goes. In a uptrend, in a downtrend, I do it from up here to down here, because this is the direction of this market price of this car. Okay guys, so I'm going to tackle this in a minute. So I already have them placed in my chart right here. So this is the Great Britain pound paired by the US dollar. It means that one Great Britain pound is paired by the dollar with these prices that are on my right hand side on my vertical. So I have my chart from, this is a daily time frame, so every single candle represents a daily time frame. So here I'm not going to talk about trend lines, I'm not going to talk about candlestick patterns and many other things. Yep. So I'm just going to break down a premium discount arrays. I actually don't use trend lines, I don't use candlestick patterns, and this is what I use, and this is ICT Concepts PD arrays, a premium stroke discounted arrays. So we can see that the if this was 2020, 2021, you can see this is 2020. It means that this is 2021. You can see down here, guys, on my block, and this is 2020. So you should have a vertical line period separator separating this year to this other year. So it means that back in 2020, entering into 2021, in GBP USD, the Great Britain pound stroke the US dollar, market kind of pushed to the upside. Yep. And then what I see on a daily time frame is the market created a relative equal highs. I'll be telling you guys all about ICT terminologies and why this is a relative equal high and it's not a resistant area. It is an institution resistant area, but it does not mean that it cannot be targeted. I'll tell you guys maybe in many other videos. So it created a relative equal high. It means that the market did not go above this area. This area, this area. The market got to this area and then reacted to the downside. And then the market turned, let me maximize on this so that you guys can see better. Market pushed to the downside and then market pushed to the upside. So right here we have a fair value gap. Yep. So I have a little blue box that shows my fair value gap. That will be from this week. Remember guys, talking about a candlestick in a week. So from this week to this other week down here, this week and this week. So the gap that is in this body, that's what I call a fair value gap. Why is this stroke a breakaway gap? Because it was not closed. It's a breakaway. Market broke away and left it open. I have my 3 up candle up here and my order block where market got to react in the place, and I also have a rejection block at the same area. So let me use a gray for this. So what's a rejection block? Same as down here. A rejection block, let me first copy this and apply it to that area so that I can have a detailed have a detailed everything about this. Okay, yeah, it doesn't want to do that. But what's a rejection block? A rejection block is where you reject by the wicks of an old high or an old low. An old high, this will be our old high. Why is this our old high? Because after the market created these relative equal highs, the market purged below this and then it swung back up, but did not cover this fair value gap and then shot down again. So once the market got back up to this region, there was the ICT order block. It means the three candles. If the market could have reacted from this area, it would have been a breaker block. This area, this is a bearish ICT order block on a daily time frame. The last up candle up here on the swing high before we shot down. So once the market got to this area and got to 50%, I'll be adding meat more to the PD arrays and how to analyze the market and many other terminologies on how to know what's happening. So this was a rejection block because it got to the wick from the body of the candle. This is not even accurate. Should be something like that. So from the body of the candle to the wick of the candle, this market got rejected right here. Between this market got rejected, and then it flew to the downside. That's a rejection block. Then the market got here, got to another rejection block down here, but at a very discounted area. Then the market pushed back up into what? Another order block right here. Market reacted to that, then market broke structure to the downside. So if I have to do this, I have to do this from this low. Let me use an X. I already have it in my template, but yeah. So an X meaning there was a break of structure. This old low was broken. And then what did the market do? Market pushed back up to what? Market pushed back up to the bearish order block right here. Then the market reacted. Boom. We have another break of structure of an old low. So remember, every time an old low is broken, there is an order block on the opposite side that is created. So when this old low was broken, it means that this became a valid order block. Yep. So once it was broken, this became a valid order block. Once the market got back to these areas, the market reacted to these areas. This is where smart money enter their positions, and then they have this. They have to, they ride the trend, which is a downtrend, has been a downtrend. And we're talking about days, guys. We're talking about so many days. So after this was broken, this old low, it means that this becomes a valid order block. And there is another fair value gap right here, and there is an order block. So market broke structure, swept deep, went deep, and then reversed back up into what? Into this fair value gap. It didn't cover 50% of the fair value gap above. The candles did not close above 50%. That I'll be teaching you in other next videos. But the market got to head a little small tap into the ICT bearish order block into premium. So still we're still talking about premium and discounted areas. So if I measure from up here to down here, you can see this is my 50%. Yep. So it means that anything up here, I can sell it off again. I don't know if you guys understand this, or I maybe should make another video. But if this is my 50%, this is my equilibrium from up here to down here, and I have my 50% here. It means that anything on this upper half will be my premium, anything on my lower half will be my discounted areas. Now I don't want to see something like the market breaking this down and then I'm trying to sell. The market is pulling back and I'm trying to sell the market from these areas. No, I want to sell the market in premium areas and not in discounted areas. So this is where you take your sell. This is a very deep premium area where the market went low and then came back up again, back into premium, and then bam, we had a break of structure right here. We broke this structure down here, and it means that we have something else that I've added is a propulsion block. So a propulsion block will be like an abandoned baby, yep, where we have an opposite candle. In a down movement we have a bullish candle, but it's not at its highest, it's not at the old high. So this is where we have the 3 up candle. That's where we have our daily order block. So the market did not come back into these deep areas, but the market reacted to this and then it shut down. So the last thing that I'll be teaching you guys is a liquidity void for this video. And a liquidity void is a series of fair value gaps, either bullish or bearish. So it means that market had real good momentum to fall to the downside. It could be because of news, fundamental news that will push the market this down, or a grab of liquidity, look, to these lows. Yep. So this is what we have, and I think you guys should try to master this, rewatch this video, rewatch ICT videos on premium discount arrays. And for this video, I will say you guys be blessed and stay blessed. Bye guys. See you in episode 3 beginner series next time. Cheers.